And now we will move on to the next session. This time we will focus on a critical topic for UX explorers that are financing. So we are pleased to welcome Alexander Tini, Global Business Development Officer at the Export-Import Bank of the United States, the EXIM Bank. So Alexander will present the tools that EXIM Bank offers to support businesses from financing and insurance to risk mitigation for export operation across Latin America and the Caribbean. So Alexander, thank you so much for joining us today. And now the floor is yours.
Wonderful. Thank you so much. Let me just share my screen. Sorry, does that look right?
We are seeing it like on presentation, like small one, not on the big screen. I think at the very...
Sorry about that. Let me see.
No worries. So when you present again on presentation mode, and then at the very top, it says display settings, and then you can switch. Swap presenter view. And there it go. Now we'll...
Okay. Perfect. All right. Thank you. Good morning, everyone. Yeah, thanks for the opportunity to chat a little bit about what EXIM has to offer. I'm going to go through these slides, hopefully relatively quickly, and can have some time to answer some questions at the end. So for those of you who might not know, EXIM is the official export credit agency of the United States. So, you know, a lot of countries across Europe and around the world have official export credit agencies where their main mission is supporting their country's exports. So for us, really the metric that we'll be looking at throughout any project is to be supporting American jobs. So we want to fill gaps that the private sector might not be filling, and we want to level the playing field for US companies around the world. To give you a little bit of a sense here of what we have to offer. So, you know, we're a senior debt provider. We can do both loan guarantees and direct loans. In the loan guarantee structure, you know, basically there'd be a bank, and then we would provide the guarantee on top of that. Because we are trying not to crowd out the private sector. This is usually the preferred method that we'd like to explore, because we want to give the opportunity for banks to participate in any given project. But if a bank is not willing to be a part of a project, then we can also explore direct loans. And we can talk a little bit about the specifics of that, but we can even also do some of those like longer term deals where we do like a structured finance or project finance. You know, as you know, project finance is obviously a more complicated structure. So it really is a question of if the juice is worth the squeeze, to, you know, hire consultants to build out what that would look like for all the different parties. Really quickly there on the bottom, that kind of distinguishes what we consider short-term, medium-term, and long-term. So short-term is that less than a year and under 25 million. Medium-term is at 2 to 7 and under 25, and then long-term is anything above that. So that $25 million threshold also means that it would then have to go to our board, which, as you may suspect, you know, it means going through a little bit, a couple more hoops. So it can be a longer timeline when we're looking at deals that are in that longer term. In the short term, we have two predominant offerings. So that middle column and the far right. So export credit insurance, where we would protect the American exporters from non-payment risk. So oftentimes, you know, the US businesses don't necessarily know all the different counterparts that they have in a particular country. And so we are able to do some of that due diligence on their behalf. And then if the foreign buyer doesn't pay them for whatever goods or services they provide, then we can then pay them back. So basically, you know, de-risks that, and is something that would be in that shorter term. But it is something that when we look at the number of transactions we do, it is certainly the vast majority of what we do is in the short term, where we do either export credit insurance, and then the other one is the working capital guarantee. So this would, give you the ability to expand your access to capital, or short-term accounts receivable. And it is also another really common tool where if either of these interest you, we have a team of business development specialists and officers across the US, and we have uh, directors in each one of these regions who would then work with you to explore, if you're looking for a line of credit, if you're looking for insurance, what it might be, and then work with you to figure out which jurisdictions and countries you would be working in and be interested in doing business in. Just generally, we focus on that U.S.-based export as, the U.S. Export Credit Agency. I mentioned a little bit of the additionality where we're not trying not to crowd out the private sector. Regardless of deal that we'd be looking at, we'd be looking for a reasonable assurance of repayment. And then U.S. content is really the underlying nexus that basically justifies that mission of U.S. jobs. So that can be both U.S. goods and services, and it doesn't also even have to necessarily be an American company. It can be a company that's, U.S. domiciled. And then at the same time, even if it's a U.S. content, that's a U.S. Company that's doing business in, say, Guatemala or something, that would also not fulfill this U.S. content, because what we're looking for is that U.S. jobs component. The more simplified look at this is what I like to call the 3 Cs. So country, content, and credit. So we need to be open in a particular country. So you can look at our country limitation schedule, which is, if you just Google it, it'll come up really quickly, and it breaks it down in each of those terms that I was referring to. So short, medium, long term, and we can do deals in both the public and private sector. So content, this would be that US content where we would be able to justify that based on the underlying US supply contract. And then finally, credit, this is the reasonable assurance of repayment. So in the private sector, we'd be looking at 3 years of audited financial statements. And then in the public sector, it would be a Ministry of Finance guarantee. So that's a little bit different, that we can work with the public sector. And that would be, essentially a G2G, government to government deal, where we would be able to get that a surety from the foreign government that the deal, if something goes south, we'd be able to get repayment from the government. So as far as the types of EXIM applications, so of course the final commitment is the final step. There's an application for all that. That's the full due diligence process. But in the left column there, a letter of interest is something that we can explore earlier on in the process, where if you are, thinking about bidding for a tender, or there's an RFP that you'd be interested in, we could explore a letter of interest where EXIM would say, if this US company wins this deal, then EXIM would be prepared to finance, up to, whatever X amount in this country. And that basically gives them a leg up, because it legitimizes that company as having the support of the US, when, oftentimes a lot of companies in other countries are getting the support from their government. So that's a tool that we can use. And then more of an intermediary step is also the preliminary commitment. So this is less of a full underwriting, but it also be a strong signal that we'd be very interested in a particular project. So high level, some of the additional information. So we have $135 billion of total lending capacity. We're only about 35 billion. We do, we don't have any minimums or maximums as far as like particular sectors, countries. We've done deals, in the, thousands of dollars, and even up to in the billions of dollars. So we have mandates on small business. So we have a particular group called the Office of Small Business that's dedicated to helping US exporters succeed around the world. So that's certainly a focus of our agency. I've mentioned the country limitation schedule there in the middle that would help you understand our potential limitations in certain areas. And then as far as sectors, we are sector agnostic. So we are, for example, in energy, there's, a lot of like energy dominance, and there's also critical minerals. That seems to be an underlying thing that's coming time and time again that we are particularly focused on. But as far as sectors, we're not allowed to discriminate based on sector. The only one sector that we're limited in is in military. And even within that, there's actually some exceptions that we could explore. One of the newer programs in the past few years is CTEP, so the China Transformational Exports Program. So through this, if you can either demonstrate that there's competition with the PRC, or it's in one of these transformational exports that are listed there in the bottom, in biomedical, wireless, quantum computing, renewables, then you're able to have more potentially longer tenors, a little bit more flexibility in some of the conditions. And particularly the biggest draw is for US content. So usually we're looking at 85% US content, but if you're able to demonstrate that you qualify for CTEP, then that would go down to 51% US content, which is a much more manageable threshold. In 5G, we have maximum flexibility, so it's considered untied financing at that point. And so we actually wouldn't no longer need to find US content. We would be satisfied with a trusted vendor. So this would be the, Nokia, Ericsson, Mavenir's of the world, where we would basically have something called a jobs plan, where we would talk them through, okay, who are the US citizens that you're employing across your supply chains, and that would basically justify our US jobs component that we're always looking for in particular transactions. We are limited as far as how much PRC involvement could be in a particular deal. So, the goal is, as you may suspect, to compete with essentially Huawei in a lot of these countries. So we are sensitive to how much ownership is given to the PRC. And then finally, US flag shipping would be required for this. So even if it's a direct loan or guarantee, the foreign buyer must use a US flag vessel or receive a MARAD waiver, which I won't get into, but it's a possibility to not have to use a US flag vessel if you can apply for this and get a exception. Another one of our more recent offerings is a domestic financing tool called Make More in America. So this would help, the focus has been, helping to bring supply chains home, rebuilding and revitalizing manufacturing. So this would allow us to have a manufacture, if say a manufacturing facility is happening in the United States and there's still a component that's being exported, then that's something that we could explore financing, which historically we couldn't have done that. So there's the export nexus. So it's either 25% or 15% for some of those priority sectors that I was mentioning, some of them that are that are distinguished in CTEP, or if they're small business as well, that also go down to 15%. And then, as always, jobs is the key component that we're looking for. So the way that we would calculate how much we could finance is based on a calculation based on jobs year. So jobs times the loan tenor would each one of those jobs year would equal $205,000 in eligible financing. And it's by and large, same underwriting kind of principles, reasonable assurance repayments that we're looking for, and loan guarantees would cover up to 80% of comprehensive risk. Our most recent initiative that we have is supply chain resilience initiative. So this is again now considered another untied financing mechanism that we could explore. And in this, there's the percentage of the offtake that's going to the US would determine the percentage of CapEx that we could finance. So if, say, there's a Chilean mine that's sending critical minerals to the US, 50% going to the US, then we could finance 50% of that project. So we'd always would love to see US content if that's possible, but it's no longer a necessity with this because critical minerals has been such a key area of focus for this administration, and this is a way that we can have some flexibilities there. This kind of demonstrates because often the middle step in the mining process isn't available in the United States. So even if, say, there's copper that's coming from Chile that then goes to Japan or Korea for smelting, and then as long as it ultimately ends up in the US, then that's still something that we could look to finance. In the longer term, we'd like to have more of that processing happen in the US, and you could actually explore even using SCRI, the Supply Chain Resiliency Initiative, to finance some of the capex in the mine in the foreign country, and then use MMIA, the Make More in America program, to build some of that intermediary step in the United States. So that's something that we've seen a couple of companies start to explore as a way to leverage a couple of different financing tools that we have, and that of course meets a lot of the policy directions that we're trying to meet. And that's all. You can reach me on this email, cover the Western Hemisphere. So I'm happy to chat about potential projects that you have, and as well as connecting you with our particular regional points of contact that we have working at EXIM. Thank you.
Great. Thank you so much, Alex. That was impressive. And we have some questions that I have here in the chat. One is from Sam that says, given Latin America's strategic role in critical minerals, what opportunities exist for mining and processing companies in the region to access the SCRI financing and position themselves as reliable suppliers to the US?
Yeah, absolutely. So, I mean, we certainly could always explore the US content avenue. So loan guarantees, direct loans, as long as there's US goods and services. So if there's mining equipment or any of that that's going into a project, we can certainly explore financing that. And then using Supply Chain Resiliency Initiative, we can't, that is, as I mentioned, untied financing. So there wouldn't necessarily have to be US content. So if there's a mine that's, as long as there's offtake agreements that are in advanced discussions or ideally even negotiated that are coming to the US, then if 100% of it's coming to the US, then we can finance 100% of that mine. So if that's something that you all are interested in, yeah, please feel free to reach out to me and we can definitely explore some of the particulars of that.
Right. And here another question that says, how do you see Make More in America reshaping supply chain, particularly in strategic industries like semiconductors, clean energy, or advanced manufacturing?
Yeah, we've gotten a lot of interest in both Make More in America and the Supply Chain Resilience Initiative. We've honestly actually seen more on the smaller, medium-sized companies being the ones that are leveraging these financial tools. We do think it's going to lead to a resurgence in the manufacturing sector in the United States, and it's now it makes a lot of sense of what makes sense for both critical minerals and across manufacturing. It could be a really good combination between the two where there's a lot of potential synergies. And we do hope that it makes the US more competitive to potentially outsourcing a lot of this in the past. And so we have seen some good early signs on it.
That's great. That's great. And can SMEs access EXIM working capital and supply chain guarantees? And where can I get more information? Someone is asking here.
Yeah, you absolutely can. And I can send the deck, and I can also send a couple of links to you afterwards for you to share with everybody.
Absolutely, absolutely. So here, David is asking in Spanish, I'll translate. So financing could be for a Latin American company that is exporting raw materials to the United States.
So the financing would only be available for if it's critical minerals that are coming into the United States. So otherwise, we only have financing available for American companies that are exporting around the world.
Okay, okay. And our audience, it's coming from all around. So here we have it's anonymous, so I don't know the name, but it's saying, would you finance a UK-based company exporting to the US?
Only in critical minerals.
Okay.
Yeah,
So,
otherwise, I would recommend UKEF as their export credit agency.
Absolutely, absolutely. And here, the last one that I have so far, it's for SMEs in Latin America that could integrate into this supply chain. What practical steps would you recommend they take to demonstrate eligibility and align with EXIM's requirements?
Yeah, so the eligibility, often the biggest thing that's hard to justify is that US goods and services that are going into it. So having some advanced negotiations there, contracts in place that demonstrate what the US content is that's going into a project, that's really helpful. And then as you're thinking about exploring potential markets, obviously you all are a great resource to get a better sense of the markets, the Commerce Department. Yeah, there's a variety of resources that are available in each of these sectors. And yeah, no, I think it's definitely going to be a group effort to get a better sense of where the US can compete and succeed.
Okay, great. So I'll do, because there are a lot of questions, if they can just review all the slides that you just presented. So we are recording this session. You will receive the recording at the end of today's program, at the very end, when all the sessions are finished. So don't worry about that. And we'll also have all the information he shared, Alex shared his contact details. So you can contact them in case you have any more questions. But with that, I would like to thank you so much for sharing all your insight with us. And thank you. It was a real pleasure.
Thank you.